real estate, it's what you can't replace that grows in value, but is land still king when it comes to long-term property performance? I'm Tim Graham, and the Property Playbook starts now. In this episode, I'm joined once again by Michael Pell, Managing Director of Propell Property, to discuss why the land component in real estate is so critical. Whether it's a duplex, a small lot home, or a development opportunity, owning more of the dirt beneath the deal could make all the difference. Michael, welcome back to the Property Playbook.
Tim, thanks for having us. Good to be here.
That's the way. Good to see you again.
And you, mate.
So, tell us a bit about Propell Property for those who haven't seen previous episodes.
Yeah, look, we help investors build up profitable property portfolios, whether they're seasoned, sophisticated, experienced investors, all the way back down to first-time investors, whether the budget's 500K or 5 million and everything in between. Established properties, development sites, duplex, triplex opportunities. We'll look at everything, and we know by doing this is giving our client, the buyer, the investor, the full range, the full gamut of options.
Yeah. Many
Many of our competitors, and never speak ill of our competitors, but many of them are one-trick ponies, and they just do one thing here. Yeah. They just do established houses, or they just do CBDs, or they just do regional areas, or they just do units or townhouses. So for us as a business, we thought to ourselves, why wouldn't we have all options on the table, look at every deal, every purchase on its merits, and get it right for our clients. And by doing so, they come back and buy again. And we've built a business out of that that's almost 10 years old now, Tim.
Yeah, congratulations. 10 years is great time in business. What you just said there rings really true to us at Hotspotting as well. So many other property experts or other businesses just focus on one thing. I only do Melbourne, I only do house and land, I only do this or I only do that. And what happens when you're so stuck in your ways is you actually don't account for change.
Well, you don't.
Right. What happens if I'm just selling in Melbourne and the market's down? I'm going to have poor performance for my investors. So the fact that you're doing multiple different types of things is great. But it sounds like land is the key thing. You need to have a land component.
It definitely is, and I'll come straight back to that in a minute. But the property groups just having something in mind before the buyer comes to them is a little bit like the doctor having your prescription done up before you go and tell him what's wrong with you.
Yeah,
can't have that. You've got to go on a case by case. Land is absolutely king. Cash isn't king. Land is definitely king. Land is what appreciates in value, Tim. The building or the buildings depreciate in value. They're not making any more land. As you know, as you pointed out in the intro. So for us, good sized land content in well-located areas is crucial. My dad was in the real estate game for 40 years. I grew up alongside him, and he taught me some of the fundamentals, which I'm sure most people have heard, but location, 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 and land is king. And the value is in the land. The value in real estate is in the land component. He always used to say to me, Michael, you can always get the bricks and mortar brought in.
Yeah.
You can get a brickie in, you can get a concreter in, a builder in, but you can't necessarily replace that land. So we've adopted what I learned from my father, and I was blessed to grow up around him until he passed away. But look, the land's the crucial component. So for us as a business, we focus on land content in good areas.
Yeah.
Hey, depending on the budget though, some people have to go a smaller size, or will still accommodate to people's situations, but where they can afford good sized land content, either single dwelling or a development site, we'll always steer towards that.
Yeah. Sounds like the old saying rings true, the best investment on earth is earth.
Well, that's right. And it's also something now with inflation, you know, we say to our clients, let's buy things the government can't print more of.
Yeah.
What can they print more of, and what do they continually print more of? Money. What does that mean? That means that the money devalues over time.
Yeah.
So $1 million today is a lot less than what $1 million was 10 years ago. So the dollar devaluing over time is something to consider with holding real estate for the long term.
That's a really good point. When people think, you know, prices have escalated so much over the years, can it continue to go?
Well, it's a combination of supply and demand, of prices increasing, for sure. Property is a game of supply and demand, obviously. So, but also in combination with that, you've got a situation where the dollar's devaluing over time. So, as property investors, we teach our investors this: hold the property for the long term, because the debt on the property with the dollar devaluing over time, Tim, the debt devalues over time.
That's right.
Yeah. So we use the power of leverage, the power of being able to go to the bank and borrow most of the amount for the property. We use the power of leverage to build up profitable portfolios for our clients, make sure they're structured right, make sure the finance is right, whether it's their own broker, their own bank manager, or anyone that we might recommend. But ultimately for us, it's getting our clients into a stronger financial position.
Okay.
Make them stronger, they tell their friends and family, and they get a great outcome. They come back and buy more, and we're blessed. That's how we've built up the business to be a wonderful team of 15, and we're based on the Gold Coast, but we look Australia-wide at all the major markets for the right deals for our investors.
Okay. Well, we say land is king, but is it always the biggest block will always outperform the smaller one? Is that always the case? What do you think?
Not necessarily. You look at somewhere like Paddington in Sydney, for example. Yep. Now, all those, they were the old workers' cottages back in the day, those tiny little 3-4 metre wide, 120, 150 square metre lots adjoining, and now they're $4, $5, $6 million homes. Yeah. So for us at Propell, it's a combination. We're not going out to the back of Burke or in the sticks and buying a big block just because it's a big block. Yeah. There's no demand out there necessarily.
It's got to come down to the usable part of the land as well, surely.
Well, that's the usable part of the land, but it's the location too. Yeah. So it's a happy mix between land content and location. A slightly smaller block in a better location will often give much better returns than a bigger block where the demand is a lot less and where there's more supply. So it's an interesting game of supply and demand. It's an interesting game of forecasting where infrastructure projects are getting, government, private spending's going, where the population's growing. The demographics of the area, Tim's hugely important as well.
Yeah, of course.
Who's living there? How old are they? Are they families? Are their incomes increasing? You must buy in an area where people's incomes are increasing, because if you don't, those owner occupiers, well, they aren't upgrading. Oh, love, we've had another kid, let's get the 4-bed. They don't have enough money. But in areas where incomes are increasing, people can spend more on their owner occupier. For us as investors, we get in there at the low levels and let that organically drag the values of our properties up. So there's a science to it, definitely. There's the book smarts and the street smarts, and I think thankfully at Propell we've got the right combination. We've got a wonderful team, as I said, a lot of them in their 20s and 30s, and myself in my mid-40s, but it's kind of all I know, Tim. It's all I've been doing, and we practice what we preach, which is important. I think the clients can see that when they come to us.
Yeah, great. I know you have mentioned in previous episodes that you do some of your own developments as well, so you're not really just saying go out and do this, saying go out and do exactly what we do.
Well, that's right, and happy to share that, not from a point of view of, hey, look at what we're doing, but yeah, my wife and I are doing
Gives confidence. You're recommending something that you do.
Yeah, like, you buy a car from the Toyota dealership, the owner of the dealership probably drives a Toyota, right? Yeah. So, we're doing a 3,000 square metre development in Surfers Paradise, around about a K from the beach now, but we've done a number of developments over the years, and we've built up to that after 25 years. So whether someone's ready to do that or start at the beginning or anything in between, we're here to put the strategy together that's correct for the client, and it's bespoke to the client. It's not a one-size-fits-all. And I think, again, with all due respect to a lot of our competitors, many of them it's just apartment, or townhouse. And for the more sophisticated, savvy investor, they know they don't want that. And we definitely don't have the script done before they come and tell us what's wrong with them. We'll have a look at their situation and help them work out the best path forward from there.
Very good. So if we're going to look at an individual lot or an individual property that's already established, is there a formula that you use to work out the percentage of the land versus the total asset value that you're looking for? Is there a bit of a formula there? Yeah,
definitely. So look, ultimately in an area we're looking at a development site, for example, we might look at the area and the zoning and understand the minimum lot size. Is it a corner block or not? Can we get access from 2 different streets? And we'll do a due diligence process on that block of land before we even present it to a client. And then we'll work out the highest and best use for that lot. Can we get 2 on there? Can we get 3 on there? Will the council relax us a little bit here because we're within 400 metres of the shops, for example, and the train and the bus? And so, yes, there's planning codes and rules and regulations in every state about what you can and can't do, but sometimes with the right manipulation in the right way and a really good town planner and a good team, you can often get higher use to a site with some extra knowledge.
Yeah, absolutely.
I've had town planners before say, no, Michael, you can't get 2 on that lot. I've taken that same lot to another town planner and we've got 3 on there.
Yeah, wow.
It's a bit like getting another opinion at a doctor or a finance broker, or just another opinion just in general.
You don't get the answer you want, you keep on looking.
Well, humans are humans, you know, we make mistakes, we're subjective, we might be stuck in our ways. So for us, it's about exploring all the opportunities for our clients, never necessarily taking no for an answer, and pushing the envelope, so to speak, to maximise that lot size and the use. So if we can get 3 on a lot that initially was only 1 or 2, we definitely will.
Yeah, great. So in terms of your national approach, you know, where are you seeing the best value in terms of, you know, these small duplex, triplex sites? Best land value. Where do you think you're seeing the best appetite at the moment?
Southeast Queensland at the moment, for obvious reasons. Olympics coming in 7 years. You know, in relative terms to Melbourne and Sydney, is still very cheap, although it has had a bit of a run, Gold Coast and Brisbane the last few years. But remember, Brisbane was a flat spot for 15 years.
Yeah, the handbrake on for
until, and you know, imagine being an investor holding, and then selling, and then things pretty much doubled from 2021 to 2024. Again, case by case, deal by deal. Look, Melbourne is coming towards the bottom of the market, if it's not already there. There's a huge amount of activity in Melbourne now. We see huge potential in Melbourne, as well as Southeast Queensland. But we've also done a lot of really good developments through New South Wales too, and my old hometown Perth. So we will look at major regional centres as well, like a Newcastle or other parts of Queensland or wherever it might be, because you never know. It might be an urgent sale, might be a forced sale. We'll take every purchase, every property, every deal on its merits, and we'll run the full due diligence and research for our clients to make sure that we get it right before we proceed. Yeah,
makes sense. Michael, finally, if somebody was just starting out, you know, what sort of advice would you give to them? You know, I've got a budget of say 800,000. Where do I start?
Great question. So be say, Tim, she's your wife, your setup, your kids. Okay, great. Is it your first investment or not? Generally, for the people in their 20s, 30s and 40s, capital growth is the play. We want, and generally for property investment, we need capital growth. We need the asset to grow in value. I could do a whole nother episode on cash flow, and the group's pushing cash flow, but is $50 a week or $100 a week going to make? No, it's not. But is 100,000 in equity growth per year or around that for a 10-year period going to change your life? Yes, it is. So we've got to build the asset. We've got to build.
You get nothing without growth.
That's right. You can't have cash flow without the asset base being there, without the capital. So we go capital growth, number one, which is what well-located land content will naturally bring. But then we'll also look at, is it an established property? What's the highest and best cash flow we can still get? So a lot of our properties are capital growth with strong cash flow. And we've found a little niche there. Many people will say they're mutually exclusive. You can only have one. It's not true. You can have both. You can have your cake and eat it too. You can have both. You just got to look hard and know where to go to find it.
Very good. Michael Pell, thank you very much for joining us again. Well, folks, that's the play for today. This program's been brought to you by hotspotting.com.au. This is Ticker. We'll be right back.